Good morning. This is Mike Wade, and welcome to High Probability Short-Term Profits. Yes, that's a mouthful, but when you look at our performance, it's worth taking that big bite. We are today going to take a look at the markets. There is so much going on right now. We've had a couple of reports come out this morning. We got the Fed meeting next week. Man, it is like a fire keg, and so much is happening. It is earnings season as well. There are so many opportunities for today that I can't get to all of them, but I've got a really good one. My favorite one of the day. We'll take a look at a live trade. We'll look at the last two trades we did last week on the diamonds and the IWM, which is the S&P 500 and the Russell 2000 ETFs. One of those is already in profit and the other looks destined for profit. So we're doing really well there. We will give away our guidebook today, our sniper guidebook. Purpose of that guidebook is that you can read it, follow along, and trade alongside me every Thursday morning at 9:15 right here on the Hub channel. And lastly, give me your stocks. If you're looking at anything you like, then please do put it in the chat box. And Ryan, who's my co-pilot here, will bring them to the table towards the end of the show here. So let's get right in. Let's talk about the markets. The first thing to note is that the Fed meets Tuesday and Wednesday of next week. That's the last day of May, the first day of April. There will be some kind of interest rate announcement. I doubt there'll be any cut. Maybe there's talk of a hike. I don't think we're going to have any kind of change in interest rates. But really, what could be really volatile for the markets is that Fed Chair Powell will speak at 2:30 p.m. on May the 1st, Eastern Standard Time, and whatever he says, painting a picture about the future, especially with regards to when, if when, are they going to cut interest rates. It has been just a month ago, 6 weeks ago, we were expecting 3 rate cuts. Now it might be 1 at the end of the year. Some are saying not till 2025. Some are saying, hey, we need a rate hike. So my gosh, there's so much pressure on the markets and things are just really volatile. And that's really good for us. So another piece of news, I'm going to hop into CNBC here. This is a free website, really good. It's a good synopsis of what's happening. And the other thing that happened this morning is that gross domestic product growth, so growth slowed to a 1.6% rate in the first quarter, well below expectations. All right, so the economy is shrinking. And also what's happened, not on this page here, but the personal consumption expenditures index, which is an inflationary index that's one of the favorites of the Fed, came in hot. So inflation ticked up a little bit. And all of that, if you look at the futures here, the futures were flat right before 8:30 Eastern time. And now we're down 1% plus on the Dow, 1.29 on the S&P 500, NASDAQ also down 1.69%. So we're coming down. We're dropping it like it's hot, as Snoop Dogg would say. This is the chart as of last night. And right now, and by the way, this is the SPY, the S&P 500 ETF. And, once again, we've been in a really nice bullish trend here. I spoke about this last week when the Fed governors were starting to ease back on the possibility of 3 rate cuts. One even Fed Governor Michelle Baumann mentioned that we might need a rate hike, and the markets have been dropping pretty hard. Big red down bars there. And the volume, institutional conviction is a way to think of volume. The volume, institutional downside volume has been increasing. We came below 500 on the SPYs, and 500 corresponds to 5,000 on the SPX. We broke below it. We've come back above. And today we are destined to open somewhat lower here in about 10 minutes. So it looks like this bearish trend is going to continue. All of it though, subject to whatever Jerome Powell says, May the 1st at 2:30 p.m. Eastern Standard Time. Mark your calendars. Be ready for some kind of move based on Powell next week. So there you go. Now let's, so my prognosis is down from here, at least until May 1st. We probably will stay above the 500 level. Perhaps we'll see. But I think this institutional downside volume will come to bear, and we're going to see further lows from here. Now, that's going to happen unless it doesn't. That's my guess. And I care about this stuff, but not too much, because we're opportunistic traders. We look for good news, bad news, and we put on trades that profit if the stock goes up, down, or sideways. So we come in for high probability profits. Think of a sniper hiding behind a wall, and we shoot profits at a relatively safe distance. And our win rate continues for almost 2 years now. I've been doing this stuff live. Continues at about a 90% 90% win rate. The average gain 10% every 7 days. So, like the movie Moneyball, we just want to get on base and get on base and get on base and get on base, score some runs along the way, and imagine you're able to generate 10% every 7 days in your account. You could literally take a chunk of money, trade it week 1, get 10% on average, trade it week 2, 10% on average. You get the message, and that stacks up. That same money you take in week 1 will generate 40% if those numbers hold in a live account. So there you go. That's what's up. We had a trade on the diamonds. Let me show you the diamonds chart just to remind you our prognosis on the diamonds was that, and we placed this trade last week over here. Our prognosis on the diamonds was that the diamonds would not climb back up above this line in the sand right here at 390. And so we placed the trade on this day here. And on that day, during the let's zoom in a little bit. I was going to say so you can see it, but it's really so I can see it. On the day of entry, there was a lot of vacillation, and we ended up getting filled on this one for 11 cents. So here's what we did. We sold a 390 call. We bought a 391 call. That's a spread. It's a credit spread. What's a credit spread? Well, there's a guide. A credit spread allows us to make money below or above what I call lines in the sand, and those are nothing more than support and resistance levels. All right, so here's what we did. This was filled in a simulated thinkorswim account, live account. We sold 5 390 calls for 37 cents. We bought 5 391 calls for 26 cents. This was an 8-day, well, it was about a 15-day trade when we placed it. We placed it on that same day. No, I'm sorry, it was an 8-day trade. This was a fast one, April 26 expiration. So we did that 5 times. We got an 11 cents per spread multiplied by 5 times 100 for the shares controlled. That's the math of options. We ended up with $55 of potential profit with a risk of $445. All right. Now, our rules are very, very clear. Once you're in, you put an order in to buy the spread back for 10% of what you sold it for. And that happened. 3 hours and 15 minutes after we were entered on this trade, we pulled it off for 1 cent. You can see that right there, right? So we bought back the 390 calls that we originally sold, and then we sold the 391 calls that we originally bought. The net debit there, if you do the math quickly, is 1 cent. So we closed this bad boy down, and we netted $50 on $450 of initial risk. So that's an 11% return, right in our ballpark. So that's the diamonds. That's a winner. And then we also have another that's on as I speak. This is a similar trade on the IWM, and that's the ETF that tracks the Russell 2000. So let me show you that chart real quick here. If I can find it. There it is. IWM, there's our line in the sand at 202. All right, so we placed this 7 days ago, right about here, and we got filled on it. And the line in the sand says really simply, all right, the stock's moving towards our line in the sand. It can keep going. It can keep going. And as long as it doesn't get beyond 202, we're fine. We just let time happen, and we'll make money on this as long as the stock is below 202 by expiration. So here's the trade. So on 4/18, 1 week ago, We sold 5 April 29, 202 calls. We got those for 39 cents. We bought 5 of the upper strike calls at 203. All right, so that's a net credit of 10 cents. So there's that. Multiply that by 5. There's your $50. Similar trade. We have a chance to make $50 on 450 in risk. Position sizing is really important, right? I mean, are you interested in making $10 on every trade? Yeah, that's okay. But position size to something that represents a max risk of, 2 to 3% of your account value. All right, so position sizing is really vital. So here's the trade, a risk graph that shows you potential profit in this trade and then potential loss in this trade. Our exit rules are, again, clear. We'll buy this back for 1 cent, GTC, good till cancel. And more importantly, if the stock closes above 202, then we close the trade down for a managed loss. We're not risking $450. We'll be out of the trade well before that happens. So loss management is the most important part of this game. Take care of your risk and let the winners take care of themselves. Indeed, had you been following us for the last 3 months or so, this is our win streak. Ryan, I'm getting nervous, It's like our win streak is 14 straight winners. Our average gain has been 14.93% every 4 days. So why I'm nervous is that, if you ever watched sports and somebody has a win streak, it becomes sort of like superstitious. But it's fun. I mean, we're going to lose eventually. It will happen. And I think this trade on IWM will be a winner. So that'll be 15. And then we have our new trade. So Ryan, we're doing pretty well here. Our win streak at 14, probably going to be 15 later today on the IWM. And then the trade I have for you here in a minute, I think is really good as well.
Yeah, no kidding. I was getting a little nervous about lucky trade number 13, but we made it through that one and another one.
And another one. Yeah. Yeah, man. All right. Now, I think, Ryan, it's a good time to mention the guidebook. We've got 2 minutes before the market opens. Let's come to the guidebook in a minute. We got to get this trade on. We have a trade on Southwest Airlines. We also, the symbol for Southwest is LUV. We had love sack a few weeks ago, so we got some more love. All you need is love. Southwest Airlines came out with earnings and posted a wider loss. They, I shouldn't laugh. I mean, it's not good news for Boeing or people that have their stock, but it's really good news for us because we're going to be opportunistic here. They also mentioned that they warned that Boeing's production slowdown has hampered their growth, and they're shutting down in operations in some pretty big markets like Syracuse, New York, Bellingham International in Washington, Cozumel, and Houston Intercontinental. So that's less revenue. So things are really in rough shape for Southwest Airlines. So let's go in there and snipe. It's a market. It's a game. It's okay. Let's be opportunistic and let's profit on Southwest woes. So Southwest is due to open down here around 27, I think the last time I saw. So it's gapped down big. Here's where it was yesterday. And here's our 200-day average. This is why I love this one, because the 200-day average, that's that blue line there. Does this stock respect the 200-day average? Yep, resist.
Uh-oh, Mike. I think we might have lost him. We'll be right back. Be back in just a second. Just letting you know, we are going to get Mike back here in just a couple minutes. He's got the old internet. We all know that can be a little bit of an issue. And he was just saying how great of an internet he just got connected for him. But we will be back in just a couple minutes. We're just waiting on Mike to come on back. Thank you for your patience. All right, so it looks like Mike's internet has not been able to come back on. So we have a substitute Mike. His name is Gerardo, and he's kind of behind the scenes, and he's going to update you all on the trade and go from there. Gerardo, the stage is yours, sir.
Oh, thank you very much, Brian. Yeah, it's a pleasure to be here. I'm going to try to do as good as Mike, but of course, I wouldn't have that high expectation, but sure we can do something here with this great trade. A lot of opportunities today there. As Mike was saying, LUV jumped down pretty good there. It's about 4 points down. I'm not wrong here. So we can try to find a bear credit spread here. And let's check what do we have available there. Ideally, I don't have my, so let me share this right here. As you can see here, we have a 200-day average right here at 29.50. Ideally, we can get it into this trade at 30. So let's start there as our starting point for next week. So May 3rd, we go to 30. We want to sell the 30. This one is giving me the 30.50 and there's nothing there, so let's check what happens if we widen this a little bit more. There's still nothing there, so let's explore 1 week further. And May the 10th, we have 32 cents for the 30.50 and just 1 cent credit for the 30.31. And remember, as we use for this system, we have to get at least 10% of the wide of our spread right here in order to make it viable. So let's go back to the chart here and see if we can go closer to where the stock is right now. So the stock is at 26.61 and I'm seeing a strong resistance level here at around 29. That could be our second level, and the reason I can explore that is because I have the 10 days and the 30-day average right here that will act as a protection for me. So let's explore there at 29 if we can find something for next week. So we have the 29.50 is giving me just 2 cents. So let's explore what about the 29.30. So there's nothing there for next week. Let's explore for May the 3rd, the 29. Okay, the 29.50 is actually giving me a really good credit here. 21 cents credit on a 50-cent spread. That's fantastic. So let's see what do we have available with the 29.30 for that day. There's not much more. So let's go with the 29.50 for May the 10th. We will sell the 29. We will buy the 29.50. Okay, it's going down. So let's try to get that for 15 cents. And I don't have my calculation. Well, hold on 1 second here. Yeah. So I don't have my spreadsheet open here, as I wasn't expecting to be live today, but it's a 50-cent spread. So using or respecting our allocation of 500, I will go with 10 contracts at 50 cents and confirm send. I will check. So my max loss is 350. That gives me then the possibility to go a little higher. Probably with 13 of them. And I'm having 455 there. All right. So I will send that order. Looks like I did something wrong here. Let me check what happened. So I wanna. I don't know what happened here. I want to sell the 29, buy the 29.50. All right, let's try something here. Let's change some strikes here and see what happened. It could be a problem with the 29.50. So if I go with one wide spread, I will go down to 5 contracts. But when I checked here, it's already giving me just 7 cents, and it's going down. So if I go back to the chart, I wouldn't go down to 28, as I'm getting really close there, and I don't have any extra protection. So what I would do in this case is just let the trade come to me and place an order for the 29, selling the 29, getting the 30 for 10 cents for May the 10, and confirm send. And I'm definitely doing something here that is giving me a problem. All right, probably the problem is here. Buy to open, sell to open, 29. Let's try again here. All right, let's go with the 29.30 for 10 cents. I'm gonna sell the 29, buy the 30, confirm. $450 of risk. Send. Yeah, still giving me a problem here. The thinkorswim simulated platform. I don't know why, Ryan. Apparently, technology is going against us today.
It really is, man.
I don't know what's the problem here. Yeah. Yeah, something is definitely not working. So, I apologize for that. I don't know what's going on with this thinkorswim today, since it's not allowing me. So if we have any other stock that some of our viewers want to check, I can do that. And Ryan, if not, we can grab this call and apologize for this inconvenience.
It's not a problem. It's Mike's fault, not your fault, right? But no, I'm not seeing anything in the chat. If you want to, we can go ahead and close things out. I think if you want to like post a trade or something like that, so that we can inform the viewers just exactly what it is that we're trading, that kind of stuff. So yeah, all you.
All right, sounds good. Yeah. Once again, apologize for the technical inconvenience there, and I'll be posting some ideas there in the chat of this video, so you can check there, and we will see everybody next week.